The broadcast is now starting. All attendees are in listen-only mode.
Hello, everybody. How are you doing? Time to take you to church. That would be the Church of Trading. I hope you guys are doing well. It is 29th of July. Nice to have you guys into a Quant Traders workshop that Joe and I like to do for you guys to help you get some additional tips to help you with the trading. So my name is EP. Joe's going to be in here just a bit to be joining me and helping you guys out with some setups. We're going to be focusing tonight on trade setups. You guys come in the trade lab, you guys are seeing a variety of different trading styles. Some of them are day trades, some of them are swing trades. Some of those setups involve 1-minute charts and 5-minute charts. And if you came in today, you actually saw Joe and I looking at, I believe it was it natural gas or gold? I can't remember. We were looking at one of the markets that was getting ready for a potential big break to the lower side today. And you never know what you're going to get. That's why I love futures. But you know what? If you like what you see in the trade lab, you can take that technology. You can take the training that Joe and I give you, and you can trade equities, you can trade cryptos, you can trade currencies. You can trade anything but your grandmother, okay? So hope you guys are doing well. Let's do a quick check, a sound check, and a visual. If you guys can see Quant Traders Workshop up front and center, hear my voice, my deep radio voice. Go ahead and give me a sound in or some kind of signal in the box. Find it at the low end, the bottom there of your go-to webinar toolbar. Let your hand, your face, any extremity fall onto your keyboard. Just find it and let us know that you are live. You can send us questions as we go. House rules, there are no house rules. I hate rules. There are no rules. Send us comedy. Send us questions. Just send us something. Interact. This room is for you. This will probably be the last free workshop. We're turning something on new starting next week. It's a training ground. We're going to turn this into a playground for training, and it's going to be for members only. So if you're a member, good chance that you're going to be with us next Wednesday. If you've just been kind of kicking the tires, trying things out, well, this Wednesday is going away, and I'm sorry you can't just create some wacky email address and get in here and get free information. Free only lasts for so long, folks, so I hope you can appreciate that. So the first piece of business here is obviously putting up the old risk disclosure, and this is basically telling you that stepping outside your front door and putting on a trade, it can be harmful to your health. Hypothetical performance results have many inherent limitations, and no, I'm not going to read this whole thing to you, but I will tell you that it basically says trading involves risk. If you don't have enough equity that you're starting with, enough startup capital, you could actually create a lot of damage, especially in this environment that we're in right now. There's a lot of people out there that are looking for a different way to make a living. They've either lost a job or some other negative situation has happened from a financial standpoint, and people are looking possibly for trading to erase that. That's not what you should be doing. There is risk here, guys, and if you're not using discretionary capital, well, you probably shouldn't be here. Okay, that's another conversation we can have one-on-one. More than happy to have that with you, preferably on the phone rather than an email. All right, so you guys got the risk, and now we're going to jump into it. So this is what we're going to do. I'm going to spend no more than 5 minutes, just whip through some slides. Many of you have already seen some of these, but for all the new folks that are here that have somehow found an invitation in your inbox and said, hey, that sounds interesting, I'm going to spend 5 minutes just kind of taking you through, setting the table, so you understand the gist, the logic that Joe and I are going to be presenting to you tonight. After about 5 minutes, I'm going to pass it over to Joe. He's going to share out his screen. He's got a few slides that he wants to present to you. And then we're going to start picking off some setups. I'll take a few from today's session. We had the FOMC, the FOMC. Powell talking at 2 o'clock Eastern, followed up by a press conference. If you guys are watching CNBC, you're probably watching Bezos getting drilled by the Congress today, but he got cut off when they went right over to Powell and started talking about the Fed, what they're not going to do. What they're not going to do is raise rates, and it doesn't sound like they're going to do it for some time, so they say. And you got to hang on the language when they give you the language, 30 minutes later. Back in the day, they didn't used to do that. Back in the day, they would release the notes, and you'd have like Greenspan come on and just talk about what they did. And it was a matter of who could read the fastest. Now it's the other way around. They actually make the announcement as to what they're going to do, and then they tell you their bias 30 minutes later. So it's interesting how the world works. Anyways, let's just start off with this one right here, finding your zone. If you are struggling to figure out how to find out where you should be buying, where you should be selling, you're going to love the levels that we're going to be showcasing here tonight. We refer to these as the RQ levels. These levels are going to show us bull zones and bear zones, which is really important because if you're looking at any ordinary chart and you're thinking, okay, it looks like this is a double bottom, looks like this is a triple bottom, looks like you have an asymmetric triangle, looks like you got a pennant, whatever it is that you're looking at, if you don't have the levels, then how do you know if you're buying in a bull zone or selling in a bull zone or selling in a bear zone? I mean, these are things that will help you identify if you should not trade or you should trade. And instead of trading one of something, maybe you should be trading 2, 5, or 10 of something. Of course, money management comes into play for helping you make those decisions. Number 2 bullet that I've got up here, do you know when to buy in the bull and when to sell in the bear? I'm going to help you with that tonight. And by the end of this hour, you definitely should have a strong understanding and grasp how to answer that question. The third one here, do you know how to identify high and low probability trades? That is all done by stacking the odds in your favor. When I say stacking, I'm talking about the list of logic, and I'm just kind of flashing up today the list of logic on a few trades we had today, the British pound and the micro NASDAQ. But the things I want you guys to focus on right now with this little pop-up here are these guys right here. This is the list of logic I'm talking about. We teach people how to read sentiment, how to trade sentiment. We teach folks how to understand trend following trades, counter trend following trades. We help you see at any given time in a 24-hour period. What is leading and what is lagging out of a large basket of markets, global markets, I might say, and I have a list of those here in a minute. Then we actually help our folks understand where you have consistency in terms of the last 1, 3, and 8-hour period looking back. We always want to look back, look to the left. Where has the market been? That's going to help us understand where it might be going. And then, of course, location. Well, this all kind of comes back to bullet number 1 and bullet number 2 in terms of helping you understand whether or not you're buying in a low risk or a high risk situation in terms of buying low or buying high, and just the opposite, selling low and selling high. And then the last one is just using some common sense, guys. When is volume at its highest? We need volume, we need volatility. I welcome both of those V's. That is the fuel to my fire. Without volume and volatility, you won't hear me doing much talking in the trading room. In fact, I get pretty bored. I don't even want to trade, and sometimes I'll just quit early because without the volume, guys, it's hard to go in and trade. And then, of course, we have little pushes, right? We have reports coming out like we did today. I think we had a housing number, we had the crude oil inventory number, and of course, we had the FOMC, which some days is a really big deal. And I told everybody this morning to stay away from the market in the afternoon if you are a neophyte or you are a very small capitalized market or capitalized trader. Let's say you had small capital of like 2,000, 3,000, 5,000. Probably want to stay away, but you know, you could trade a micro and keep from having too much damage there. I did some trades this afternoon, and I'll share those with you, and I'll talk about the setups with you a little bit later. All right, next slide. This is really the big story. I like to flash this up in the trading room to kind of show you guys the before and after, everything I've been talking about with those questions there. How do you identify? How do you add? When do you reduce? You can't do that if you have a chart like this on the left. This is a naked chart. Over here on the right, these are the levels, and they do adjust every 24 hours. They're going to reset every 24 hours based off of the Eastern Standard Time. That's the clock. That's the time zone that we choose to use as a starting point. And as you can see, we have critical levels, red levels at the very top and the bottom. We have neutral trading zones in between the greens, in between the yellows, and we can identify bull and bear zones. Very, very critical for what we do. There's a bigger picture showing you all the levels, and this is actually really good too. You might want to take a screenshot for you to understand the jargon, the language that we use inside of the trading room. I mentioned a basket of markets earlier. This is the beautiful thing. Everybody here that's visiting us tonight, you guys all trade a few of these markets. Maybe you only trade the mini S&P. Maybe you only trade equities. Maybe you're doing some Amazon, some Tesla. You're worried about the 10 units that you just bought last week. How's Microsoft doing? Maybe you got some traditional, some J&J in there. Maybe you got some smaller cap. Everybody here has got this, whether it's in your retirement portfolio or your Robinhood, whatever it is that you're doing. The reality is we can trade these with futures. We can trade these with equities. We also look at markets that are going to be affected by reports that we had today. Housing numbers are going to affect these. Fed announcements are going to affect these. And then, of course, these over here are connected with the precious metals. Of course, silver's had some all-time highs. So has gold. Copper's had some pretty unique runs here as of late. You guys might remember the run that crude oil had on the way down, going -40, and right now crude oil stands at positive $40 a barrel. So there's been an $80 run from the very bottom that we had back in the March-April timeframe back up to where we're trading now. Crude oil, by the way, has been one of the markets that has been a lot more has not had as the most robust moves that we've seen with some of these stocks as of late. But I'm waiting for crude oil to kind of get out of that funk, and that was something that Joe and I were talking about earlier today. Of course, when these markets all move, that's going to affect how the world moves on paper. I'm talking paper, I'm talking currencies, and you could throw one more currency that I haven't added to this mix, and that would be the almighty digital currency, right? Bitcoin actually had a pretty robust move this morning right out of the gate at 9:30. That we talked about, and that was a box trade setup. Maybe we have time, we can get to that. So that's the basket of markets, so everybody knows what we're looking at and how these markets work, or how our quant technology works. And then the last thing I have here to share with you guys is just the trading styles. On any given day, when you guys come into the live room, what I'm trying to do is I'm trying to show you everything I've taught you inside of our course, inside of a video that you've watched, trying to slow it down here inside of a workshop. And I'm trying to show you how a box trade works. That's one of my strategies, where it's very simplistic based on a 5-minute time frame. I'll be showing that one tonight. And then the one that's true to my heart, that's probably 95% of my trading, which is scalping. And those trades can last anywhere from a minute to 15 minutes, and sometimes even longer if I've applied some pyramiding and I'm allowing my last few units to run to higher levels. And that's what I refer to as turbo scalping. That's a 1-minute time frame that I use. And then probably the one I've been having a lot of fun with inside the lab this year, because Joe just introduced it to me in January, is the RQOBOS. That's the overbought, oversold retracement indicator. And this is going to actually help me a lot when I'm in a trade and I start getting some indicators telling me that the market's overbought. If I'm long in the S&P today and I've got some indicators popping saying, hey, market's overbought, well, that's an invitation for me to scale out of the trade and reduce risk by bringing my trailing stop up. And if I get a retracement signal, that's telling me that the market potentially is getting ready to turn, I'll do the same thing. I'll get a little bit more aggressive with the trailing stop, and maybe even just bail out of the trade altogether. So those are things that I can do with that indicator. And if I'm not in a market, I can actually use this indicator to get into a trade and try to take a market in the opposite direction. Something I like to do when we're at the top of zones or at the bottom of zones, and I'll try to share that with you tonight as well. All right, so I probably went a little bit more than 5 minutes, so my apologies, but I know he's standing by, and I'm going to get him introduced right now, and his name is Mr. Joe Rios. Joe, how are you tonight, my friend?
Good, good. Can you all hear me? I'm using a new mic.
Yeah, you sound good now. A little faded at the beginning, but you sound good now. Got a new mic, huh?
Yeah, I have been having all kinds of problems with the old mic.
Oh, this is much better. I can tell you right now, like stellar better. So I'm glad to see that you called Judy and were able to get her Time Life Books microphone and be able to apply that. So now we can have operators standing by calling Joe Rios right after this webinar.
All right.
Are you ready to share out your screen?
I'm ready.
Okay, so I'm passing over to you, and I'm looking forward to seeing what you're going to share with everybody tonight. It's all you, my man.
All right. Give me a minute to set this up. All right. So tonight's presentation is all about trading setups. This is part of a educational program that EP and I have been working on, and which we're actually going to start the training next week on. So it's just a little piece. It's just on trade setups. All right. So our approach to trade setups involves forecasting models. We use 3 basic models. Today I'm going to talk about the reproductive forecasting, which is a series of rules that follows familiar patterns to achieve high levels of efficiency and minimal error. Trade like a master chess player. This is key. You know, you don't want to be guessing. You don't want to be throwing trades because they look good. All of a sudden, you want to be planning ahead. And how to do it is something that we teach. And it goes back to how master chess players approach the game of chess. Groot was a Dutch chess master and psychologist who conducted some of the most famous chess experiments of all time. Chess experts don't think forward a large number of moves or consider more possible moves than the amateur players. Master chess players know how to quickly narrow it down to 2 or 3 promising moves. And that's it. And that's what EP and I are going to be teaching in our course. All right, the first thing you should be doing is looking at the current trade themes. Where is the current focus? One of the things that I like to do is follow the big institutional traders. And these big institutions, the large ones, most of them have the same strategy. They're macroeconomic type. of approach to the market, which involves the major asset classes. Shocks, transitions, really translates into opportunities. Right now, the themes that we have going is obviously the COVID-19 and the potential vaccine. Now, when I say COVID-19/vaccine, it's really two parts. Are we going to shut down the economy again? When are the airlines going to open up, or the cruise ships, restaurants, and so forth? And then, of course, if a vaccine comes out, it's going to affect the market. Interest rates, we just had it today, right? We had FOMC, we had Chairman Powell speaking. Economic health of the economies is also key. Reflation, inflation, we haven't heard about that recently because COVID has really overtaken, traders' attention. But soon enough, we'll be back looking at, are we going to be approaching inflation or not? And of course, the White House, we've got elections coming up. That's going to affect the market. Remember the last election, big surprise, Trump won. I think it was 2 in the morning was the final ballot count. And man, that S&P futures took off and didn't look back. And we had some really nice trading opportunities for the next 2 years based on what we were calling at the time the Trump trade. All right, reproductive forecasting takes a lot of pattern recognition. Recurring chart patterns is an approach that can help a trader in various ways. A trader trained in pattern recognition should be able to quickly and efficiently recognize trading opportunities as well as different market environments. In other words, with patterns, you can pick up when there's a transition or a shift going from risk on to risk off, mixed markets, also correlations. Japanese yen is selling off, meaning potentially the carry trade is being initiated. And then we have price patterns, right? Double bottoms, double tops, so and so forth, that actually EP and I looked at today during the trade lab. Now, I like to do this exercise. For those that have attended our prior courses, you've seen this. Can you identify the arrow and the baker's measuring cup in the Federal Express logo below?
Wait a second. This is a trick, right? Can you identify the arrow? I know the arrow. What was the other one?
Baker's measuring cup.
Baker's measuring cup. Oh, okay, I see it now.
You see it now, right?
I see. I've always seen the arrow, but I never saw the measuring cup. Okay, but I wonder if everybody else can.
I promise you this: from now on, every time that you see a FedEx truck go by, you're gonna say, "I see the arrow. I see the measuring cup."
Oh, you're killing me, dude. You know you're gonna need to put a circle or a laser or something on the measuring cup.
I don't know.
It took me a while.
I don't know.
And I know I'm the dumbest guy here, so everybody, I hope can see the. I hope everyone can see the arrow.
Let's see if this thing works. Oh yeah, it's working today. Okay, there we go. Right, there's the arrow. Great, man. And here's the baker. Whoops, here's the baker's measuring cup. So the purpose of this is that we need training. You know, we need to be trained, but there's more to it than just knowing it.
Well, hold on, Joe. There's more to it. Wait. Go back. There's more to it. I can't believe you didn't see this one. Can you show me where the inverted triangle is?
Inverted.
You got an inverted triangle. Well, I guess you'd have to use your mind, but yeah, there you go, man.
Yeah.
Formation. I love it, man. No one on the planet is doing quant workshops with FedEx and finding where's Waldo inside the FedEx. I love it. Sorry, keep going, bud.
Well, this is part of finding trade setups, right? So, here, look at this. The mysterious. What is the X factor? You know, when you're talking about trading, you know, there's some traders. If you've worked in with other traders, you've been in a large trading room with other traders. There's some that get it and some that don't. And of course, the ones that are good, people think, oh, you know, he just has that hunch. You know, he's got a talent, or he knows so much. I remember when 20 years ago, I started teaching when I had the broker dealer in Miami, and Elena, which was my assistant at the time, one day she comes and says, Pete and Roger, they're having a hard time. They're not getting it. They're struggling. And Joe, you've been doing this too long. You just know, you know this stuff. You have the X factor. So I go, just like I learned it, other people can learn it, right?
Yeah,
So this is
true.
an interesting article that came out a while back in Bloomberg. The mysterious X factor isn't such a mystery after all, according to Rethink Shaw. I would describe the X factor of risk adjustment as part of a suite of emotional competencies that extends from, listen to this, knowledge to recognition to understanding. I love it. One part is emotional self-awareness, knowing not to make a decision when you're agitated, for example. Another is the ability to predict prices and read people. If I lived in New York before, when you're in a big major city, you're not thinking all the time, but you know when you can, when someone's going to bump into you, when to turn left, when to cross the street, even if it's, you don't have the go-ahead light, and you don't think about it. It just happens, right? That's the X factor. All right, so X factor, it's from this to that. Okay, so you got to have the knowledge. Knowledge meaning, let's start with how the markets work. Correlations. Okay, that's helpful. Price patterns. What's a double top? What's a double bottom? That's knowledge. But knowledge is not going to make you a profitable trader if you don't know how to recognize it. So you got to have training in how to recognize it. It's got to be part of that instinct, that X factor, like how to move in a crowd and not have to strategize about it. You just do it. Then you got to have the understanding of what it all means. And then, of course, you got to have the tools. You got to have the trading technology. So that being said, there's one part of the slide that I forgot to put in here, which is the difference between training and entrainment. So training, you learn how to do it. Entrainment is when you are in a program where you're living it from day to day, which is what we do in the trade lab, where then it becomes second nature. Okay, it's not enough just to learn it. You got to be able to have it in you. All right, so this today I'm going to use LVGO. It's a stock, and here's a 240-minute chart. And for those that have a trained eye, you can see the most latest price. There's a pattern there. What is that pattern? It's a symmetric triangle. Okay, this is as of yesterday. We got a symmetric triangle. What can we expect out of a symmetric triangle? Is it going to go up? Is it going to go down? Is it bullish? Is it bearish? No, it just means something's going to happen. We should see volatility. We just don't know which direction. All right, same 240-minute chart. That was a naked chart, like EP likes to describe the Gnostic levels. These are the weekly levels. And this is our DMS in the bottom, which is really not important right now. What we are going to look at on the, well, actually we are. The DMS, this is yesterday, this is showing risk off. So it's a risk off, don't expect a breakout, right? Now, these levels are very similar to the Gnostic. It's actually almost the same algorithm. The dotted green line is the bull bear line. Now you can see this the stock has just been hanging on top of the bull line for weeks, with the exception of the beginning of the week. The end of the week, beginning of the week, it's been oscillating around the bull bear line. These are the same as the Gnostic levels, like I just said. And then we've got the RQ channel, which EP uses in the part of your box trading, I believe, correct? With the color codes.
Yes, for the yeah. In fact, I'm in the background right now prepping something for that. So yes, you are correct. The channels are dependent for the box trade.
All right. So as of yesterday, we've got an RQ channel there. It failed to break out of there. We've got the symmetric triangle, and we've got first resistance, and we've got second resistance. Now let's take a look at the next chart. Now this is what happened today. and I'll show you a shorter time frame. Broke out, ran past first resistance, came back to test, and closed right above it. This is beautiful, guys. This is a fresh breakout. And this came out of spec. Now, if you don't think this move was a lot, this went from 112 to 121.70. That's a big move for a stock. Now let's look at the 30-minute chart. Here we've got the Gnostic. Okay, so same thing, levels. First resistance, second resistance. This is prior to the breakout. This is yesterday. So here it closes. You can see the symmetric triangles, just 30-minute chart. And here you see the same RQ channel pinpointing prior highs. That's a indicator. That's a signal. That's important. And then look at it today. Now here, here's the open. This is take it back. This is the open right here, because these channels on stocks don't recalculate at midnight. They recalculate at the Wall Street opening bell. So you've got a nice little run, and look what happens when you've got the RQ channel right at first resistance. I love these because the chances that you have of a breakout on a symmetric triangle is just, it's there. And look at that explosive move. That's what it looks like on the 240-minute chart. I already showed you that, I believe. So I might have a double. Here is the same symmetric triangle, but on a daily chart. Reason why I'm showing you different time frames. Go ahead, EP.
Joe, real quick, do you like to look at, I've got one of my workspaces where I've got 5 charts all lined up. I was showing everybody this morning when I was asking you about, I think it was crude.
Yeah.
I got the daily, the 240, the hourly, and then the 5. So the daily, 240, hourly, and the 5. So 4 charts. I think you could throw another 30-minute in there. Do you have a personal preference, or do you like to see them all together when you're making your decisions?
I'm glad you brought that up. I'm going to show you the first thing I do, which is something that you teach a lot on and you review a lot. Let me see if I can get my spotlight. See here, this is the architect. Look at LVGO on top.
Yeah.
Right. This happens to be the stocks I own. These are my candidates. But look, it's on top. I mean, this thing in the last 2 days, 14% because of today. So this thing's on top. So I start looking one by one. And then what I do is let me go back to, let me get this thing off. Yeah, let me go back to the slide. So what I do is I have on my same workspace, which I should have probably just showed you the workspace. On my workspace, the only one that you're not going to see is the daily, because I was drawing on it for the presentation. But the daily sits right here. So this is what I got. So I have them all linked. So if I want to look at Fiverr, which is another one of holdings that I have, they all pop up, right? So what I do is I look at the 240, and if it looks like interesting, then I look for the 30-minute to see where is the 3-day trend. You see this regression channel? That picks up the 3-day trend. And then for my timing, I just look at the 1 minute with the Gnostic. Now, here you'll see how it ran this morning. Here's the opening bell, and look at it, boom, 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 boom.
Yeah.
Right. So you had a chance at the open, or you could have gotten into zone 2. And
there's something to be said about those longer time frames in terms of being patient. Test your patience, obviously, because if you're sitting there looking at a 1 and a 5, it can drive you nuts if you're looking to hold a trade for the longer term. You're going to have to endure
Right.
the test, the retesting, and the retracements. And if you're looking to hold something longer, you really shouldn't be looking at a 5. So I think it's great that you're showing that, because it gives people a different perspective.
Okay.
Kevin
This is
Kevin
what.
just popped off. He likes the 240 and the 5. I'd be curious if anybody else wants to throw their 2 cents in, just to kind of get a feel for the room. You guys know I'm a 1 minute and 5 minute man. And Joe, he likes to use a longer time frame. So
Remember,
I think
this
it's
is
good.
swing trading. This is
Yep,
position
yep,
trading and swing trading, right?
yep. Good point.
Dennis loves it. Dennis made a lot of money with that 240-minute chart 3-4 years ago. When we had a similar training course.
Mm-hmm.
I don't think he's in the room today, but this is what it looked like this morning. So I'll take you through it. So basically, I look at the 240. I say, hey, you know what? This guy is we got a range box here, and this guy's testing. Then I look down here. This is the 30 minutes. They already started right here. I say, hey, this thing's moving up, and he's going to test this RQ channel. Then I look over here. I go, I want to buy it. Now, disclosure, I didn't buy this today. I bought this back in here. Okay, it's just a trade setup. I've already owned this, and I owned it when people thought I was nuts because I bought it. I forgot where I bought it. I bought it in this breakout back in here, and then it went sideways, and then boom, there it is today, up. What I say from like 112 to 122. So again, I go to the architect. I look at the leaders, the velocity leaders. If I'm looking for longs, I don't know if my screen just went. There we go. So from there, I go through it. I have all these types. So all I got to do is click on here, and these will pop up. So I go like 240. I go, oh, I got a signal. I go to the 30-minute. Oh, I got a signal. Then I go. Sometimes I don't even go to the daily because I look at these every day. My candidates here. So I have a pretty good idea, but I still have the daily here. And then I just look at the 1 minute for my entry. Now, the reason why I use a 1 minute and not a 5 minute is because on stocks, the NOS levels start at 9:30. And so I don't want 5 minutes. I want to be able to trade right away. And that's it. That's my trade set. That's one trade setup. I just showed you the process. I'll show you another one, perhaps. Where's well, no, I mean that's it. There's no reason to show you anymore. This is I don't want to overload everyone, but that's one of my trade setups. So you saw the steps. This is reproductive forecasting. It takes forecasting. You want to trade like a chess player, where you know very well a handful of setups, and when you start to see one of these setups, you're able to act quick and get your orders in and wait for the market to react. The only thing that I haven't covered today in the setup, I did show you the entry points, but the money management. So like everything else, not every trade is going to work out. So you need to have money management parameters in there where you're going to risk $5 to make $10, $20, or $30. And as long as you keep that, you can afford to be wrong half the time. But what I have found with the technology and with pattern recognition, your chances they get a lot better. It's really amazing. And that's it, EP. That's all I pretty much got. Does anybody have any questions?
Yeah, you know what? If anybody has any questions for Joe, he just covered stocks and some swing trading. So if anybody has anything on that, this would be a good time to ask him. And hey, Dennis, just saw your comment. So Dennis is in the room, and James, welcome in. I understand James or Dennis sent you our way. So nice to have you in here listening in. And I am going to take back over the controls, Joe, if you are ready to give them back up.
Yes, sir.
All right, cool. And then I'll let you can see the questions coming in, right? So just feel free to jump in if you got
All right.
anybody that's asking you some stuff there.
Oh yeah, I
All
see
right,
Dennis
guys.
is in. Good. Hey
Yeah.
Dennis, hadn't seen you earlier.
All right, guys. So I'm going to talk about some setups. Tonight, I'm going to start off. We got about 20 minutes left here. So I'm going to talk about box trades. There's one strategy I can give you guys. For those of you who've been following me for a long time, you guys know I do a lot of scalping on some 1-minute charts, and it takes traders a little bit longer to pick up the strategy. It's a little, I was just talking to a couple of traders today, and one of them was telling me that it's a little too fast for his liking, and I get that. I often get people that say, how do you trade so many markets at one time when there's so many things to look at? That's the skill that it just takes time to set in, right? I mean, I'm not going to lie. And scalping does take longer, but I'm going to show you guys one right now that doesn't, okay? And we got plenty of people that are actually, some of which are in the room right now that are having success, that only started with us a few months ago. And I know it's the box trade that's really helping people out. So I thought, we're going to have a whole segment on box trading, and we're going to kind of give you a little clip, a little insight to what that looks like right now. So just give you guys kind of a tease right now. The training course that Joe and I are kicking off next Wednesday. We're going to be doing 1-hour workshops dedicated to the entire course, which is broken up in 20 different segments. We're going to be talking about things such as money management, leverage, entries, scaling in, scaling out, pyramiding, correlations, entry, step-by-step strategy for the box trades, for the scalping trades, for the RQ, OBOS, R indicator. If you want to learn how to swing trades, how to execute, set it and forget it with OCOs, executions, the styles to use to execute trades. There's 20 different things, and Joe and I knocked that out in about 30 minutes. We could probably add another 10, but we're going to start with the 20. And what we're going to do is we're going to take every Wednesday to get those recorded. We're going to invite all the members in, members that are on board for the course. And we're also going to offer up to members that have already been grandfathered into previous licensing agreements. We're going to offer you guys an opportunity to come into at a reduced price and call it a refresher course, okay? So what we're doing here tonight is just kind of for the masses, and looking really forward to getting something boxed up and recorded, canned, and into your hands. And it'll be a SaaS offering. For those of you guys that know me, I'm kind of a jack of all trades. I got a lot of things involved in other types of coaching, whether it be sales, whether it be trading, and I have a lot of hands in network and cybersecurity. So just letting you guys know that this is going to be a subscription model. It's going to be available for a low monthly cost. It'll be involving all the technical indicators, and then all the videos that incorporate all the training, and then it also will involve coaching with either myself and or Joe. And you can start and stop it at any time, okay? And that'll be a monthly fee. For members that are grandfathered in, you'll have the ability to join us with a reduced price for a refresher course. More details on that coming next week, and I'll be showcasing that in more detail inside the trading room next week. But for now, let's talk about box trades. Okay, so technicals. This is what you need to have in order to put a box trade together. So for some of you, you don't have any of our indicators yet, so this is all new. And there's others of you that only have the levels, don't have anything else. Some of you are still trying to get your DMS set up, or trying to get the RQ Tech set up. I actually sent an email out to a few traders today with my workspace that actually has the RQ Tech just like mine. So hopefully you can just drag and drop it into your NinjaTrader folder, and it'll look the same as mine does inside of the Trade Lab. So these are the technical indicators, right? And as a quant, we're applying technical and fundamental. And when I say fundamental, I'm talking about that list of logic that I applied earlier. So this is the logic over here on the right. So you got the technicals on the left. You got the logic for the fundamental information here on the right. So what I'm going to do is I'm going to bring these down here, and I'm going to show you in the background the old mighty S&P. It's easy to talk about because everybody has a hand in the market, no pun intended, in one way or another. And side by side, you've got, as I like to call it, the naked chart. You got the S&P on the left. This is going to go back to, I'll go all the way back to 8 o'clock this morning. So there's 8 o'clock right there. And you can see the FOMC obviously happened in the middle of the day with that up-down formation. And then over here on the right, I'm going to back up till 8 o'clock in the morning as well. So there is the same market, two different looks, one with levels and channels and one without. Okay, so let's just look at these items one by one. I said that you're going to need to have. And if I can pull this back up, let's talk about the first one, the levels. So you guys can all see the levels. You've already known by now what these are. I gave you guys a map to the money earlier with that screenshot I put up, that slide that had all the levels and gave you the definition of each one, the bull, the bear, critical resistance, critical support, and so forth. So you got to have the levels, okay? This helps me identify if I have a bull or a bear zone. So I can look at any market. I can literally go up here and drag any market into this screen. Bitcoin, right? There's Bitcoin. I can tell you what the market has done since midnight. It sounds like this. The market started off in the bull territory, mid-session of the London or the European session. It went halfway up in bull territory, tested the bull, went neutral for a short period of time, floated in the middle of the bull zone. Then it had a big spike and tested two levels of resistance. Let me just get a laser eye on this. Tested two levels of resistance around 11 o'clock. It came down and tested the bull again, and then it floated back up, touched or kissed the second level of resistance, floated underneath for a long period of time, and the last 4 hours, really since the close of the market, it dipped its head into the secondary bull, but it's turned negative, still in the bull zone, but losing momentum. Okay? This market has never had a bearish trend to it today. Never. That's how it sounds. Now I'm going to talk to you about the same market with a different tone, and that tone is going to be talking about the colors of the candles. It had strength at 2 a.m. It turned weak to neutral, yellow, at 4 a.m. Had some more strength at the end of the prime time, identified for the London session, at 5 a.m. Turned weak for a short period of time, lost momentum, turned weak, purple, went neutral, yellow. Strength came back in around 8. That's the prime time for the US session. Had a lot of strength. That's the FOMC over there. In the last 4 hours, it's been weak. I wouldn't consider selling Bitcoin for a day trade or a swing trade for that matter, unless the market started tippy-toeing into the bear territory. That's how it sounds when you have the levels. When you don't have these levels, here's how it sounds. Sounds a little something like this. I don't know. Good luck. May the force be with you. I mean, you can go up here, you can grab a pitchfork, you can grab a fan, you can grab some regression or aggression, you can get some pasta, which I am a big fan of the Fibonacci. You can put some arcs and some triangles. You can do whatever you want to do on it. And you can actually put the inputs that you just spent $100 or $500 or $1,000 from a guy that trades this market and has been doing it for the last 20 years. That's great. Can you take that same indicator? Can you take those same inputs and can you put them on any one of these other markets and get the same results? Let me help you with the answer to that question. No, you can't. Never have I seen it be done. Okay, so that's what we're doing here. All right, so now that you got the levels, let's go to the number 2 thing that you need to have. And the number 2 thing we're talking about is the channel. Okay, the channels are, you're going to see these lines. Okay, see the blue line? There's 2 of them. There's 2 upper channels or bullish channel trend levels. I shouldn't say levels. I don't want to get you guys confused. There's 2 channels telling me where there's breaks. And they're different measurements. Make it really simple. I like to wait until the 2 channels come together. So I'll circle those. Let's go actually back over to the S&P. That would be fun to just show you guys Bitcoin for a minute there. Let's go back to the S&P and talk about when those channels were together. Okay, you can see right here, see how they're together? Okay, they're separate together here. That's a great signal right there because they're together. You know, so on and so forth. So you can use one independently, or you can wait for them to both come together. But what we're trying to do is we're looking for a setup where you've got the opportunity to buy low. Okay, we got bull zone 1 and bull zone 2 up on the screen right now. Bull zone 1 is going to be here. Bull zone 2 is going to be here. Well, we want to buy low. So if we can buy at the beginning of when the market is breaking into the bull zone and going from neutral, yellow, to blue, strength, those colors of those candles are identified as the RQ navigator. Okay, that's the third thing I have on my list. So you got the levels, you got the channels, and now you have the navigation with the color change. Yellow to blue, or yellow, or blue to yellow, and yellow to purple. Purple, there's only one little solo purple in there. That's a sign of weakness. There's some other purple over here. Okay, so the channels are helping me see where there's a potential breakout to the upside or to the downside. Those channels are really, really important for the box trade. Let's keep going. I mentioned the navigator, which is the color of the candles. Let's talk about the fourth thing that you need to have. That would be the DMS, the dynamic market sentiment. You need to have the DMS on board. The DMS is located at the bottom. I'm going to raise this up so you can see it. This is really cool. Back in the day, Joe didn't have this. I used to have to figure it out manually, which I actually still do, but that's just because it's just embedded in my brain. But it's nice that you have a cheat now. You got this little cheater. It tells you what the sentiment is. If it's blue, you have a conflict. If you have red, it's risk off. Green, it's risk on. And yellow would be mixed. Why is that a big deal? Well, when I go over here and apply the logic, take a look at the top here, risk on, risk off, mixed, and conflict. There's bullish and bearish conflict. Note that underneath each one of those headers, there's a list of markets. So if we have right now blue, we have bullish conflict, that's column D. I want to be looking to trade gold, crude, and natural gas right now. In either direction, obviously try to find leaders and laggards. So if I actually apply that little bit of logic right now with the last item on the list here, which is going to be the RQ Tech. RQ Tech is built into the NinjaTrader Market Analyzer. Here it is. NinjaTrader has what's called the Market Analyzer. Here it is all blown up. And this has got all my markets. You can see from left to right, shows me net change, the last 1 hour trend, the last 3 hour trend. We call that just next stream. Don't worry about the word. It's trend. 1 hour trend, last 3 hour trend, last 8 hour trend. Those are the only things you really need to have. Don't worry about anything else over here. Just look at those three things. It's all about color coordination. Okay? So color coordination, and if I click on net change, it's going to show me the weakest down to the strongest, or vice versa, the strongest down to the weakest. And so right now, our strongest markets in terms of net change, not that many in terms of net change, right? Natural gas, bonds, and Swiss franc. Are either one of those, gas, bonds, and franc, or any of those inside the bullish conflict? Yeah, natural gas is. And also you can see down here currencies. Green means long, red means short. So short dollar, long currency. Well, right now, we got a strong Swiss franc. In terms of net change, it's actually not that strong. But look at the 1 hour trend. It's negative. 3 hour, negative. So it's inconsistent right now, the Swiss franc. The natural gas, which actually just slipped out, is also inconsistent. It's not that strong. In fact, guys, there's not a lot of strength anywhere in any of these markets at this point in time. Now, mind you, this is 1 hour into the Asian session. And for the Asian session, I'm usually a fan of trading gold. Where's gold right now? Gold is towards the bottom. Is it one of the biggest laggards? It's not the biggest one. You've got Bitcoin, NASDAQ. Actually, it's the third biggest one. I take it back. Yes, it is. It's one of our lagging markets. It's negative trend for the last 1 and 3 hour time frames. What I'm doing right now, guys, is market selection. Market selection. I'm trying to find out what's stacked up in my favor right now. Right now, it looks like gold would be a smart market to consider selling. So what I'm going to do is I'm going to go over to a gold chart. You could do micro gold, mini gold, full gold, and I want to consider selling. But I can quickly say, oh, there's not going to be any selling here with the box trade. Why? Because we are in the bull zone, and we don't sell when we're in the bull territory. I'm trying to stack the odds in our favor. Can you sell here? Of course you can. But I'm trying to help you guys not take the trades that are riskier. Take the trades that are trend following, buying the bull, selling the bear. Yeah, that's what we're teaching tonight. Simple rules to follow. So I can quickly look at this and say, oh, there's no trade, because I got to wait until it gets into the bear territory. And watch what I'm going to do here. I'm going to look at every market that I would trade in the Asian market session. Copper is another one I would consider. And copper looks like it's close to a potential purchase. How does the net change look? Let's go pull up the RQ Tech. RQ Tech right now for copper is, look at that. It's green on the 1 and the 8 hour. Only thing that needs to turn green is the 3 hour. Okay, so would I consider buying this? Yes, I would. And I'm going to now talk to you guys about the box. Now the box, the right and the left side of the box is based off of time. I'm going to go up here and grab a pencil, and I'm going to go down here to grab not a text box, but it's actually a the shortcut is hitting the Control and the F12 on your keyboard. Control and F12 at the same time. You hit both of those, you can draw on your chart, and it gives you a box. Okay. Now the left side, I'm going to be basing it on time. Asian session prime time is from 20 hours or military time, 8 o'clock in the evening to 11 o'clock. So the left side I have lined up with the 8 o'clock time frame. I put a line right down the middle. You guys are going to see that that is almost 8 o'clock. There it is right there. Let's move the box over to here. And I'm going to draw that box, drag it over until I get to 11 o'clock, which is going to be right there. And that's where the box right side will reside. Now the bottom of the box is based off of the level, and the top is based off of the level. This is bull zone 2 inside of this box. Now let's recap the technology that I have on board. I've got the levels. I've got the channel. I've got the navigator, which right now is yellow. It's starting to actually test the second level of resistance, the second yellow level, the top yellow level. It's what we refer to as the R1B. I've got the navigator telling me with a yellow candle that we're still neutral, and I'm waiting for this yellow candle to start turning blue. Okay, I've got the RQ DMS down below that's telling me that the market is a bullish conflict, and applying my logic with a bullish conflict, I want to trade gold or another precious metal related, which would be copper, crude, gas based on leading and laggards, long currencies, short dollar. And the last thing that I have to do is measure the risk. Now this one, and if you guys were here, I think it was last week or the week before last, I did a trade live in the workshop, and we made money in like two minutes. So we might have that here again. I'm prepping a buy stop right now for the September contract, and where I want to place that stop is right above the channel, just a couple of ticks above it. But I don't want to work that stop there until the candle starts to turn blue. So I'm just going to park it up here for now and wait. And what I'm going to do is I'm going to take the time to measure the risk. Now the risk I'm going to measure is going to be from the point of entry down to either the inside of this first yellow or below the bottom yellow. Now, I like the bottom yellow. I want to have 2 levels of support or 2 levels of defense for this market to hit my stop, get long, and maybe it comes down and tests the first level, hopefully not going into the neutral trade zone, but if it does, test that second level and bounce up. So maybe it's going to retrace before it starts moving. So what I'm going to do is I'm going to measure from the entry down to the yellow level approximately to give me my risk. I'm going to put RSK, that's the risk. And then I'm going to measure up to here for the reward. I'll just put down RWD. Now, you're going to need to know what the minimum tick value is and what the point value is. I can send you guys, just reach out to your NinjaTrader broker. He can send that to you. You can go to their website. If you can't find it, just send me an email. I'll send it to you. Ask me in the room, and I usually send out the link for margins. If you go click at the margins, it also takes you into the price values for all the markets. But for right now, I'll just help you guys. It's $25 per point on crude oil. I'm sorry, copper. So I can just eyeball this and say, okay, 29.36. And let me move this out of the way. The yellow is down here at 29.28. So 29.28 to 29, we'll call it 37, is going to be roughly 9 points, okay? 9 full points of risk. So 9 times $25 a point. It's going to be $225 of risk for me to take this trade. Now, guys, Asian session, secondary bull zone, you shouldn't be risking more than 1%. That would be a standard recommendation, 1% of your account size. So if you have a $20,000 account and you're going to risk 1%, don't risk more than $200, which means I can trade 1 contract here. If you have a smaller account, either you find a mini copper, I'm not even sure if they have a mini copper, but let's pretend that this was the S&P. Trade a micro. That's why you guys see me trading a lot of micros with the gold, with the S&P, the NASDAQ, the Dow. Love trading the micros because everybody can trade them. Now, copper's taking a big move down right now. Look like we might be getting ready for a long, but not the case. In fact, it's getting ready to turn purple. Are we going to take that short? No, we're not. And the reason for that is because we don't sell in the bull. So we got to kind of wait on this trade if it's in fact going to start rallying back up. And the way it's moving right now, it's almost like there was a report that just came out. It's 9 o'clock, and I wouldn't be surprised if there was. I didn't check before we started tonight, but I'm going to flip over here and go check out my handy dandy Forex factory to see what kind of reports are happening here in this evening. It's Wednesday, and there you go, guys. The New Zealand dollar business confident number just came out. We have the Aussie dollar going to be affected around 9:30 with some more numbers happening, import pricing. So guess what? Currencies are a good time to be trading right now. So let's go take a look at the Aussie, and let's go take a look at the New Zealand dollar and see if I can find a box trade for those markets. Here's the Aussie dollar. Okay. Market has been neutral since, my goodness, right around 3 o'clock this afternoon. And right now, I do not have the channel inside of the secondary zone. It's in a neutral trade zone. I don't like to do box trades really more beyond 50% of the way in the zone. So this is too high for me. Plus, it's not blue yet. This is inside of a neutral trade zone. I want that channel to appear up here. So for me, I'm not liking this trade setup. This is not a trade setup. There is no trade here. As a matter of fact, last time there was a trade, it was going back to around 1 o'clock this afternoon. I could go probably back further than that and tell you guys in the London session early this morning, yep, just like I thought, check it out right there at 2:10, which is 10 minutes into the London session, European session. That was the trade. Do you see how it turned from yellow to blue? Do you see how both channels are together right there? You can see it breaking into the bull territory, breaking the upper channel, That circle that I'm putting on the screen right now is what I'm going to refer to as a qualifier. That was the qualifying bar or candle. You'd want to buy stop a little bit above it. As it's turning blue, you don't have to wait for the candle to complete. You get your stop in, you place your protective stop down here, either on the inside or even lower below the bottom green level, which I'll try to put up on the screen here for you. No, not this. There we go. Put your stop either below the first or the second green. Doesn't even matter in this trade because the market never came back, and you're going for the top. If you're going to go for more, that's called greed. Nothing wrong with that, as long as you're trading multiples. And you can see that this was a fine trade. You guys have heard me say it many times. I'll say it again here. The European session is really the ideal session to be trading currencies, guys. That's just how it is. Let's go take a look at the New Zealand dollar. Here it is, 6N. Let's see if we're close to a trade. Well, it actually just broke the upper channel. They're both together, two channels in one. What's missing? Guys, tell me what is missing for me to not take the trade here. Why would I not take the trade? Who can tell me what's missing? Give you guys a second to figure that one out. Right on. Thank you, champ. Thank you, Kevin. Thanks, Dwayne. Thanks, Dennis, Larry, Jack, and Mark. You guys all got it, man. We don't have the right color, right? So without a blue candle, no go. It's a DNQ, does not qualify. So you just wait on it. It can be frustrating at times because everything's there and you're like, oh man, I got the box set up. You know, I can see the trade. This is the market I want to trade. I got the box all dialed in from 8 o'clock over here to 11 o'clock, and I've got it on the levels. And man, all I need to do, I can do 2 of these, and you're sitting here watching it, and it doesn't turn blue. Sometimes it'll toggle blue, yellow, blue. As soon as it toggles, as soon as you have blue, get on it. It might turn to yellow and close yellow. What does that mean? Nothing. Stay with it. Wait. Be patient. After all, you have a number at 9:30 that's going to affect this market. It will affect this market at 9:30 when you got the release of these numbers. Okay, ANZ business confident number. Better believe it's going to be affected. So know what reports are coming out. So again, we got the technicals and we've got the fundamentals, and that is how you trade like a quant with this technology and this logic. That is how you trade using the box trade strategy. So now you know. If you didn't know before, now, my friends, you know. And you saw me display the levels, the channel, the navigator, the DMS, and the tech. And I can do that all day long at any time. Again, the 2 V's. What are the 2 V's that I need? A little pop quiz. See who's been paying attention. 100 points for the first 3 people that can tell me what are the 2 ingredients that I have to have in order to make money. They both start with V as in victory. What are they, guys? Larry's the first winner. 100 points for Larry, 100 points for Dwayne, and 100 points for Mark. Thanks, guys. Volume and volatility. Any market, man. If I don't have volume and volatility, I'm not going to do it. Not going to be able to trade it. Okay. Kicks and giggles. I'm going to throw gold up on the chart here. It's another market I like to trade during this session. You can see it's been hugging the top forever. I'm going to share with you guys what I did on the NASDAQ today. I did this in the FOMC announcement. I waited for the announcement. Now, I did my trades with the Turbo Scalp. This is interesting, though, because there was a box trade, even though I was using the scalp. We were breaking above when the announcement came out. Now, it's very dangerous, by the way, to trade during FOMC. This was the conference that came out 30 minutes later. This was at 2:30. So the this wick right here, that was the announcement that the Fed was going to do nothing. Duh. Everybody knew that the Fed's not raising rates. Duh. But what's the language? What's the bias? What's Powell going to say? Is he going to let a word slip out that's going to create panic? Is he going to let a word slip out that's going to create stimulus, positive vibes, peace, love, no war? Well, yeah, that's what he did. Well, the market loved it. There was nothing negative. Going to stay the same. We're not going anywhere. We're not doing anything new. It's going to take a little while to get out of this. And even when we think we're out of it, we're still going to wait. I mean, that was basically the weight of the conversation. Well, there's a box trade here. Market's going from yellow to blue. It's breaking above the channel. You guys can clearly see that here. And you can see, hopefully you can see my arrow that's on that candle. Well, again, I did not do this trade based on the box. I'm going to just show off the chart that I did place this trade on, and it's actually a different work space. So just bear with me as I go over to my Turbo Scalp workspace. And there it is. It's on a 1 minute. And no, I'm not going to talk about the entry and the setup for Turbo Scalp. That's for another time. But here was the trade this afternoon, guys. Right here. Right here. Okay, so it's a 1 minute chart. And my qualifying bar, for those of you that know how Turbo Scalp works, there it is. Closed right up and over the band. And that was a qualifier. I got long. I took profits up right underneath the top. I took profits again right underneath the next level. And the market started to slide. And why did it slide? Take a look. The RQOBOSR. Yellow dots are telling me it's overbought. Red ones are telling me potential retracement. I could have reversed. So guys, even though I made money, I'll still criticize, I'll still critique my trades. What I should have done, the woulda, coulda, shoulda, if I would have recognized the retracement, if I would have recognized that we were second, I could have placed a sell stop here to not just protect what I had left, but to reverse. And I could have made money almost to the bottom. I didn't. I went conservative. I said, well, this thing might be getting ready to shoot up. And I was watching the S&P, which was doing that. And I said, no, I'm not going to do it. I'm just going to take what I got and walk away. So I did walk away for 6 minutes, got myself a Fresca, and came back and did it again. This time it qualified above the SMA. I bought it. Had to deal with the dip, but it came up, took profit. Yeah, took profit again. And then the third time I was actually holding on. Actually, this was the same trade. I bought into it again, but I had a small little stop out here. This was me trying to catch the last 30 minutes of the market running up, which it didn't do. It actually had a late run up here post the stock market closing. The nice thing about the futures is that they stay open for, 15 minutes longer than the stock market. So that was that little run up there. So anyways, some turbo scalping trades that I thought I'd just share with you guys that I did in the NASDAQ. By the way, helped me make back all of my losses this morning and helped me go positive for the day. So thank you, FOMC. Thank you, Mr. Powell. Check is in the mail. And speaking of checks, I'm checking the time, guys, and we're over. So I'm going to say, Joe, you want to come back in and have any closing thoughts for these fine people that have taken an hour and 15 minutes out of their evening to spend it with us in the Fidelity Surround Sound Candlelight Dinner? Maybe Joe fell asleep. Joe, are you still awake? It's nighttime. Joe's got to get to bed, man. He's up at 12 hours trading with me. That's where I'll be, guys. If you guys have any questions, comments, concerns, you guys can send those to us. Here's the course and the details of what we have available to offer to all of yous. We got a trading room, we have technology, and we have a training course. If you want to reach out and contact us, I'll go back to that page, I promise. There it is. I'll just pause it this time. If you want to just be a fly on the wall and take advantage of trades with us, you can learn inside the trading room. There's no doubt about it. There's lots of things that I talk about and showcase in the room. If you want all the trading technology and want to do it yourself, I get the DIYs. Knock yourself out. We can make a full package available to you. But if you want actually to learn what I did times 20 with myself and Joe, that would be our training course. And that's going to be available starting next week. And we're very excited to be able to offer that to you. And that will take place of our workshops, and we'll actually be doing that for the paid subscription members. Also available for grandfathered members if you want to take a refresher. We're going to make an offering for you there as well. If you want to reach out and ask anything, get involved, there's the contact information, support@riosquant.com, and Tim will be more than happy to set up a time to give you a call and talk shop packages and pricing, tim@riosquant.com. Guys, I am out of gas. I know it takes a lot for me to say that, but it's been a long day. You guys can probably hear it in my voice, and I got to be back here in 12 hours. So I'm going to bid you guys all a fantastic rest of your evening. Thank you for spending tonight with Joe and myself, and I hope you guys learned a couple things, and hope to have you guys back in here tomorrow morning. You guys can get a 5-day pass if you haven't done so yet over at thetradingroom.com. Sign up and be hanging out with me tomorrow morning as I roll out and do the same thing tomorrow, looking for setups based on what the sentiment gives us and trying to apply the list of logic to find trades that make sense so we can put some smiles on our faces. All right, so I'm out of here. Stay good, guys. See you guys tomorrow morning. I'll hang back for another few minutes. If you guys have questions, send them through in the text at the bottom of your toolbar, and I'll be more than happy to chat with you guys for a little bit. Thanks, guys.